The focus today is Bharti Airtel, and it's an interesting set of numbers because on the face of it, yes, there is a miss, but that's on account of an exceptional loss during the quarter. The net profit coming in post-exceptional loss at 12% lower at 4,153. But if you remove that exceptional loss, then it would be up about 25%. And there are a few parameters that have stood out. Operationally, it actually looks reasonably good because the average revenue per user has risen as much as 10.4% sequentially to 233. Of course, the long-term plan for this company is to take its ARPU all the way up to 300. That is a move in progress, and the effect of the tariff hikes that were undertaken not too long back coming into play for the quarter gone by. And the EBITDA margin has actually expanded quite a bit and come in higher than expected at 52.7% for the quarter, compared with 51.2% in the quarter that was previous, in the sequential quarter gone by. And you have EBITDA as a whole that's risen as much as 11%. The net debt to EBITDA currently stands at 2.5 times, and that's also something to watch out for. We've got our guests joining in. We've got Astha Jain, who is a senior research analyst at HEM Securities, and Swati Hotkar, who's AVP Technical Research at Nirmal Bang. Thank you so much to the both of you for joining in, and happy Dhanteras to both of you, and festive greetings to both of you and your teams and your families. Astha, I'll come to you first. What did you make of Bharti Airtel? Operationally, it seemed to me that it was a strong number, but the street is looking at it maybe slightly differently. The stock is down in trade today.
Hi, good morning to all of you, and happy Dhanteras to all of you, all your viewers, your team. So now talking about Bharti Airtel, I think the street is disappointed. Major reason behind it that might be the street is concerned about now leadership, because I think from 1st January 2026 onwards, the current MD and CEO will step down. So I think that is one of the reasons. Secondly, what I have seen is that in the results, some of the segments have performed well, but the digital TV segment still is not performing to that extent. And we have seen certain sort of disappointment from that segment. So I find the results to be a mixed set of bag, and we are not very much disappointed with the numbers. I think the numbers are quite okay, quite average, and one should remain invested in the counter because ARPUs has seen this significant rise. So that is, and in fact, we have seen the growth in the margins as well. As you have already told that profit was a decline due to one-time loss. So I don't consider it as a major cause of concern. So overall, we are finding the results to be a mixed set of bag, and we are remaining positive on this counter with the price target which we are setting for this counter at the initial level is at around 1700 to 1730 odd levels.
Okay, so would you buy from that perspective then, or would you keep holding?
I think right now the streets are not much liking these numbers, so maybe we can see some major or some minor fall, not major, but yes, some minor fall we can see from here also. So buying on dips is a better strategy to be applied to this counter, maybe at around 1600 to 1580 odd levels. It is a good buy also. So right now we are recommending buying on dips at around 1580 odd levels, but we are positive.
Okay. All right. On that note, it's time to shift to the queries that have already come through. And by the way, if you're writing in for the first time on that WhatsApp number that you see on your screen, then do tell us your name and where you're tuning in from. It'll help you identify when we take your question.